This video is about what's going on in the oil market right now, and it's a warning to people who want to buy oil because they think it is low, but the ways that you can buy it, there are very risky ways to buy it, and you see that they're blowing up in people's faces here. So today, USCF announced a 1-for-8 reverse share split for the USO ETF. So for people who don't necessarily know what this is, it's an ETF that trades, that's supposed to track the price of oil. And it's not like they just bought some physical oil and put it in a big storage tank and are waiting for the price to rebound so they can sell it. It's all based on futures contracts. So if you buy it thinking you can just wait it out no matter where oil goes, you're very wrong. And you can see what has already happened to another one of these oil so-called ETNs. That is Barclays Oil ETN, OIL is the symbol, and they're going to liquidate it, which the ETN gives them a right to do. So anybody who bought this thing thinking that they're just going to wait out the oil carnage in their ETN or ETF is going to find that they lost most or all of their money. So that's the Barclays Oil ETN, and here the USO ETF. If you don't know what a reverse share split is, it's basically a very desperate attempt to not get your stock delisted. Because if your stock trades for under $1 for a certain amount of time in a 30-day period, your stock will get delisted. So a trick that usually really scammy penny stocks use is to do a reverse split. So if the stock was trading at 10 cents, they could do a 10-for-1 reverse split, and the stock will now be trading at $1, even though you own the same amount percentage-wise of the stock. So this is what USO is doing in a desperate attempt to keep their ETF price from going below $1. Is it going to work? Who knows? I don't know. But what I know is that it's a very, it's like the last thing you want to do, really. It sends a very bad signal. And so why are these ETFs going down or going out of business or whatever? Because of the price of oil, but specifically because of the futures contracts of West Texas Intermediate, which has traded negative the other day for the May contract, and now people are worried that the same thing is going to happen maybe for the June contract or even the July contract. So why is that? Well, because there is a whole lot of oil being stored right now all over the place. And here there's 250 million barrels being stored at sea right now. 250 million barrels is about 2.5 days of the worldwide use of oil before the demand destruction from the virus. I'm not sure what the current rate is for world use, but it's probably not even 100 million barrels anymore. So yeah, because of that, and West Texas Intermediate, like I said in my other video, is landlocked, so they can't even offshore these barrels into ships in the Gulf or anything like that. So these contracts have been selling even negative because nobody can take delivery of the physical oil because there is no storage. And even at Cushing, Oklahoma, they only have like 80 million barrels of storage, whereas there was equivalent of 109 million barrels in these futures contracts that expired in May, that if they had to take delivery, they couldn't store it any place. So let's take a look at what is inside these oil ETFs. So let's look at USO, and here it says that most of the holdings are crude oil June and crude oil July. That's about 2.4 billion, $2.2 billion. And another, the ICE West Texas Intermediate Crude, June, another 600 million. So it's mostly futures contracts. And so it's not like you're holding the physical thing, because if these contracts act similar to the May contract where they go down a lot or even negative, this USO could be wiped out as well, similar to the oil ETN. And one scary thing is, I don't know how true this is, but it looks to be true. This person tweeted, this is a screenshot from a Bloomberg terminal of what the USO currently holds. And in it, it says that, here's the crude oil, June and July, right? 39% and 14%. But here, it says that it also holds Zurich Neptune US Opportunities ZP. So what the hell is that? Let's take a look. Here, Zurich Neptune US Opportunities ZP Pension Fund. And what are the holdings here? Microsoft, Alphabet, Apple, Willis Tower, MasterCard, Amazon, United Health Group, Mondelez. So what the hell is a supposed oil ETF doing, holding a fund that holds Amazon and Google and Apple and all this stuff? It's really crazy, and I don't know how true this is, but it looks to be legit here. I mean, this is a screenshot, unless they doctored it or something like that. That's what it says here in Bloomberg. So I don't know what's going on, and I'm sure most people don't know what the hell is in these ETFs, these oil ETFs. And I don't mean an oil ETF that owns actual oil stocks like XLE or VDE, which actually owns the oil companies, not just oil futures. And let's look at this USO, what kind of returns you can expect to get from these ETFs that hold oil futures. So, historical net asset value, this thing has dropped from 14 just a year ago down to 2. And the performance is down, 93%. So these things are made to decline or dissolve over time because of the futures role that's lost in them. So these are not products that are investments, they're trading vehicles that you're supposed to trade during the day and not hold overnight or hold for long periods of time. So you should not buy these thinking that by buying USO, you're somehow owning a piece of some physical oil being stored in some tank somewhere. It's totally not the case. You're buying futures contracts, and depending on how they perform, and you see how they've been performing, you could lose your money way before oil rebounds. There's a saying that the market could stay irrational longer than you can stay solvent. So keep that in mind. So for the people that are thinking that, yes, oil is cheap relative to historical prices, it hasn't been this cheap since 1991 during the Gulf War. That's true. But don't get confused and think that you're going to buy low here by buying one of these oil ETFs that own futures contracts and who knows what else they have in them. If you truly believe that we've seen the worst of oil prices going down or whatever, go buy the oil companies themselves. And if it was me, and when I buy oil companies, I'm going to be looking for the biggest, strongest ones, and the largest oil majors out there And this is not a solicitation or a recommendation to buy any of these things. This is just what I would be looking at. That would be something big like Exxon Mobil, Chevron, Royal Dutch Shell, British Petroleum, all of those big guys, because these small guys now are going to be not able to pay their bonds if they have to reduce their oil drilling or shut their wells down. So the big guys are gonna eventually probably buy up the best assets of these guys for very cheaply, and so when oil eventually does turn around, the biggest guys will probably be in the best positions. So if you want to buy oil, stick to actual oil companies or real oil ETFs that hold oil companies like XLE and VDE, the Vanguard Oil ETF. Stay away from these ETNs and these, futures contract ETFs like USO and the other ones, because you don't realize what's in them and how they diminish over time. So if you like this video, give me a thumbs up. Let me know if you've ever bought USO or the OIL ETN, which is now going to be redeemed for who knows what they pay you, $1 or $2, something like that. If you ever bought them, if you got burned by them, and what do you think about them? And if you haven't done so already, please subscribe to my channel. Thanks for watching.